Hello, my friends. Welcome back to another episode of Casa De Confidence. I want to talk about money today. Money is one of these topics that we stay away from. But if you want to grow as an entrepreneur and grow in your confidence, money is not the topic that we need to avoid. And today I have an expert, as always, someone who definitely this is his jam. He's going to be able to talk to us about money. But again, financially free is something that we all aspire to. But that freedom doesn't come by just osmosis. We don't wake up one morning and have it. We definitely need to know how to invest our money, where to put our money, how to generate money, all of the money things. So I want to go ahead and introduce you to our guest today, Bronson Hill, and I want to ask him to share a little bit that maybe we can't find online. What is the one thing that maybe we need to know about you that we can't find on your socials or your website?
Yeah, that's a good question. I think I'm pretty much all online now, but no, it's great to be here at Casa De Confidence. Love the topic, the title, and talking about money. Let's see. I'm actually leaving tomorrow. I'm going to Croatia and Albania for about 9 days. So it'll be country 46 and 47. So I'm a big traveler, and that'll be a fun adventure.
Okay, well, I need to catch up. I think I'm only at 38 countries, and Croatia and Albania are on my list. But yeah, I definitely feel that travel expands you. But you're an entrepreneur, and I want to ask you, how did you get to be an entrepreneur that has the freedom and flexibility to travel around the world?
Yeah. So, I basically was a well-paid professional, like I'm sure a lot of your audience, made good money in corporate. And I was working for a medical device company doing sales. I wore scrubs and I went into hospitals and helped physicians with their heart surgical products. And I was getting paid really well. I was making over $200,000 a year. I worked with a lot of physicians. And yet I saw there was a lot of people. It was hard to take time off. You get paid well, but there was just time was really the thing that people didn't have. And so I even worked with a couple of physicians. They were cardiologists that made over $2 million a year each, and yet they were working 60 to 80 hours a week every week. And to me, I just said, this does not feel like freedom, right? So we say the words financial freedom, but really what we want is time freedom. Because if I have the ability to have passive income, and there's a lot of misunderstandings about what that really is. It's kind of a buzzword, but Warren Buffett describes it this way: unless you learn how to make money while you sleep, you'll work until you die. And as entrepreneurs, we're good at making money, especially if we get better, we learn, we grow, we learn. We're good at making money, but having our money make money for us, right? Our money becomes a part-time worker for us that works in another thing that we're not even related to, that it just keeps growing even if we're not involved in it, right? And that's what passive income really is. And so as I learned about it, I started getting into real estate. I had some stuff I did in single family, and then started learning about multifamily. We ended up raising capital for larger deals, realized it was much more efficient for me to help other people to invest in apartments and other businesses and oil and gas and just really, a few different things. So there's really three things we help people with now. It's really to provide cash flow appreciation, which is long-term growth, as well as tax benefits. A lot of people pay a lot of money in taxes. If you're a high earner, you're typically paying between 40 to 60% of what you're making in taxes. And there are ways legally to reduce that. I was able to reduce my tax bill from a 25% taxable effective rate to about a 1%, right? And so there's ways you can so I think just learning about this stuff is incredibly powerful. And it's even more powerful than just what we do in our business, because it's actually not just what you make, but it's what you keep, right? And it's being able to have freedom over your time.
Well, I couldn't have said it better myself, and I'm so glad that you're the expert talking about this. I have a personal story that really relates a lot to some of the stuff that you said. And I think that this is one of the reasons I was intrigued by you coming into the show. My first husband's parents invested in real estate when they first got married in 1950 something. I guess, we're aging ourselves here, but they invested in a duplex. They bought a duplex. And of course, this is Miami, 1950 something. And I think they paid $9,000 for the duplex. And they lived downstairs. They had tenants upstairs. And that allowed them, and was the thing that set in motion their financial freedom, so that when they retired, they not only own other properties, they were able to pay for their children's college,
Yeah.
from some of the one of the apartment buildings that they had. And again, they owned a home, they traveled. So I know that, again, most of us have a lot of investments in different places. And right now, with the way the market is, it's very volatile.
Yeah.
So I'm very intrigued by the idea of investing in something that is an alternative solution that can actually give you money back. So
Yeah.
definitely, I want to ask you, because I didn't start like my former in-laws in, 20, 30, 40, 50 years ago. I may want to start now. And as an entrepreneur, I want to make sure the investments I'm making are not going to take away some of the freedom that I have as an entrepreneur and go back to working 24/7.
Yeah. Yeah, exactly. Yeah. So I think it's, I quote Warren Buffett a lot. I think he's our generation's best investor. And he says the best investment you make really is in yourself, right? It's in your own education. And so I think that there's an element of this that it can feel weird to be like, oh, I'm doing things like traditionally people buy stocks and bonds. They have a money person and they're in Wall Street, right? That's typically what we're taught to do. And this really started in the 1970s and early 80s with the ERISA Act, which is the Employee Retirement Act, which basically allowed companies, instead of having a pension, right, which was a direct benefit, they started doing direct contribution. We're just going to give you this amount of money and you got to figure out how you're going to manage it. So what that did is it pushed a lot more people into Wall Street, higher, riskier assets. Now, I used to be what's called a registered investment advisor. And so it's called an RIA. And now still an RIA. I'm called a recovering investment advisor, right? So I kind of was on that side. And I was kind of like, oh man, it just doesn't really serve people. So the more you learn about it, I have a chapter in my book, Fire Yourself, which talks about just beware of Wall Street. And really, Tony Robbins is a motivational speaker that I enjoy listening to. And he had a book that came out called Money Master the Game. And it said that people will, these funds that people invest in, their ETFs, their mutual funds, they'll say that the returns are, the fees are about 1.2%. That's kind of the average fee. But there's all these hidden fees that they legally do not have to disclose. It feels totally ethical. It should be illegal, but it's not. So there's about 2% of additional fees that you don't even see. So it's things like administrative fee, cash drag fee, marketing fee, all just total BS fees that are in here. So we're at 3.2% now. Then if you have a money person, a lot of people, become wealthy or worth more than $1 million. We work with a lot of high net worth people. They'll have somebody who works at Morgan Stanley or one of these big Wall Street groups. And those people make another 2% on everything every year on top. So that you're paying around 5 to 5.2% each year on what's invested. Now, the returns of the stock market, typically on average with the up and down years, it's typically about how you measure it, is around 6 to 8%. So the challenge is you're basically getting a savings account, right? You're really getting a kind of a moderate yield savings account. And, Wall Street is benefiting significantly, but you're not. So I think that, that's one challenge. Obviously, we've seen the volatility, we've seen other things as well. Right. But the problem is that real assets like real estate and other things, those were the things that people used to run to. I mean, there's a time when the stock market crashed significantly 100 years ago, of course, literally 100 years ago, but, 1929, it went down 89%. Wow. And it took a few years ago to 89%. It didn't come back for 25 years. So Julie, that would be like, you imagine right now we're in the year, 2025, would it be, 2050, the stock market comes back. How old would I be? How old would you be? And also it wouldn't even, not even adjusting for inflation. So there was a time in there, people would say, oh my gosh, why in the world would you ever buy stocks? Right. So it's funny how everything's kind of been flipped on its head. So I think that when it comes to real assets, it feels weird if we haven't done it. And like you said, we'll hear these stories. We kind of know we should be doing real estate. We all know somebody who's made a lot of money over the years, but I think there's ways you can do it where it doesn't become a part-time job, where you kind of start out, you can do it yourself, or you can, if you're busy, find somebody to do it for you. And then, you're actually getting that mailbox money, which is the name of my podcast, is the Mailbox Money Show. Is just, how do you get it to where you do a little bit of work to vet it, and then you're getting cash flow from your investing?
Well, that is a lot to process. And I want to kind of unpack it. Well, listen, you're fine. I want to unpack a lot of that, because I would imagine that in order to be able to start to invest in real estate, and again, many people go through the process of buying a house. Not everybody has a great experience, and there's a lot of different moving parts to navigate. But does it take a lot of planning, I would think, to create these new investments? What are the first steps that we should be looking at?
Yeah, so I think step number one for people, it's not necessarily taking action right away or like, hey, I've got this money burning a hole in my pocket, I've got to get into a deal. It's basically being a part of educating yourself, and going to a great way is if you live in a decent sized market, or you're within an hour of a mid-sized markets. I mean, they're all over the country. You can look for a real estate meetup. You can look for like kind of local investor groups, and just go meet people and have conversations. And you'll learn a lot by having conversations. You'll find people that are flipping houses, and they're doing apartment rentals, and they're doing all kinds of short-term rentals. And so you'll learn about what people are doing, and it just gives you an idea of like kind of what's going on out there. And one thing for me that's been really great is when I heard about, there's this term we call syndication, which is a way we structure apartment deals or other sorts of investing in oil and gas or investing in other types of projects. And when I first heard there was syndication, I didn't have any context. I was like a TV syndication or like a crime syndication. Like I just didn't have any, but everything sounds a little weird until you meet somebody and then that's what they do, or you hear more about it. And so I started learning more about it, and I realized, oh, this is just kind of a way that they, pool money up from different investors, that they can be passive and people go operate this deal. So I think that, if you're willing to learn and you're willing to say, hey, I'm going to listen to podcasts, I'm going to read some books, I'm going to go to some live events. I think that's the one that people don't do. A lot of times they don't go to live events. You can go to a local meetup. Like I mentioned, you can go to a conference, a lot of conferences. There's one called the Limitless Expo coming. It's going to be in July, August. That's an incredible event with 1,000 other investors. And you're just going to meet people that are very serious, been doing this for years. And then basically you become the person in the room that's really not doing real estate. All these people are. And you're going to be like a sponge. You can figure out what people are doing. So I think the first step really is education. And then, really, I think a great relationship that you're looking for as an investor is really other investors that are not really trying to sell you anything, right? There's a lot of people in finance that are always trying to sell, just like Wall Street, trying to sell you something. And as much as like we want everybody to do our deals because we want to help them, we like our deals, whatever, I still have a bias, right? But another investor has been investing for 10 or 20 years. You meet them at an event and you're an investor. They just simply will want to help and want to, hey, I've worked with these guys for 10 years. I'd absolutely work with them again, and watch out for these guys over here. So there's that sharing of knowledge but the reason why people haven't heard about this is because they don't advertise. We're not allowed to advertise the same way that Wall Street does. So it's very interesting how things are set up. A lot of these deals are private deals, but we've seen people do incredibly well. I was able to about 25x my net worth in 4 or 5 years being involved in these type of deals. And of course, I had my own unique path for it, but it's just a different way to do it that I think offers a lot more stability and a lot more flexibility and cash flow for people.
I muted myself. I I think that this sounds like a really great step to start. Education and really absorbing so much of the information out there is incredibly important. I mean, certainly as an entrepreneur, I've done a lot of that. I found the people that have been doing it for a while. I really learned from them. Did you, as you were getting started, Bronson, did you feel intimidated? Because if people were doing these kind of things for a long time, when you're kind of a little fish in a big pond, it would seem that it's very intimidating.
It definitely can be intimidating. I think now I think also at play, because yeah, I did. I felt intimidated. I was like, well, what can I do? I think there's also, I know this is a podcast mostly toward women, and there are also some gender things here too. It's very interesting that in some studies, and they've shown that, you know, men will have 2 or 3 out of 10 qualifications for a job and they'll apply. Mm-hmm. Yeah. And a woman will have 9 or 10 of the qualifications and they still won't apply. And so sometimes there can be that cautiousness, which is self-protecting, which is good. There's a real strength that I think for women, the feminine, really definitely a strength there. But there's also at some point, I think having a sense of, okay, I'm making a decision now that I'm going to do this. I'm going to give myself 60 days or 90 days or whatever this period is, and I'm going to work at it. It's almost like I'm an athletic person, so I do races. Mm-hmm. So I think about, I'm going to, in 60 days, I've got a race coming up. So how do I want to train when I'm in the gym? What sort of classes do I want to go to? And I visualize myself being out there at the race or doing the competition. So it's the same with that. It's like, okay, if my goal is to invest, I've got to see myself there investing. I've got to see myself going through the process of doing diligence, and everything again is weird until you've actually done it. And, deals, they can go, I mean, you look at Wall Street, they can go great and go bad. Things, all different ranges of experience. But regardless, again, I think one thing, I'm not giving anybody any specific advice, but if somebody has a net worth of $5 million, to put $50,000 into a deal is not a lot. If somebody
Right.
has a net worth of 100,000, 50,000 is a lot of money, or if it's, more than they have. So I
Right.
think it just depends depending on each person's situation. But I think, sometimes these deals, the minimums are often, 50 to 100,000, our group, other groups. And so I think it's being willing to kind of put yourself in the arena and say, I'm going to learn, I'm going to invest somewhere, and then be able to see how it goes. And for most people, they do have a good experience. They do enjoy it. They find a safe, asset that they like, such as an apartment building or some other asset. And it's a learning experience as well. So you're investing in yourself as you're doing it.
Well, I think that, I look at my clients in particular, they are looking for a long-term exit strategy for their business. They're looking for long-term financial freedom, as we've mentioned. But again, as an entrepreneur, I know that to create passive income in my business, I have to put in a lot of time, a lot of effort, and everything worth having requires that. But tell me a little bit about how can we get started that is a baby step. I'm a tiny habits coach, and I'm big on this small, doable, tiny step forward.
Yeah, that's it. Yeah, I think I'm one. I have big goals, but then it is about creating small steps, right? Just little things that kind of move us toward. If we can do a little bit every day, a little bit every week. So I think for people, a tiny step would be getting a good book, a great book that a lot of people start with is the book Rich Dad Poor Dad, right? So Rich Dad
Yeah,
Poor Dad is
that's one
just
book.
thinking about, instead of your house, the house you live in, is that an asset or liability? He would say it's a liability because you're not actually earning income from it. So it's this idea of, what am I actually cash flowing from? My book behind me here is called Fire Yourself, Replace Your Working Income with Passive Income in 3 years or less. So finding good books, finding good podcasts, there's all kinds of ones in that space. And then again, it will start to kind of familiarize you with the terms. You'll start to learn about it. And then what I say is, if you can, from there, join different deal groups. So we have like our investor club, the Bronson Equity Investor Club. And so when we have a new deal, we launch it, and it's just, it's basically just we have a call with somebody, and then we send them our new deals when they become available. So it's every month or two we have something new. And so there's other groups like that. So if you get on people's deal list, you maybe get on 5 or 10 of these, and you have an intro call and you ask questions and you're kind of going through it. It helps you to kind of take what you're learning from the books and what you're kind of thinking and through in your life. Just make sure you can get your head around something, because I think that with investing, it shouldn't be confusing. If it's confusing, or if you're not sure the ways how the investment works, or maybe what's the primary risk that you could lose money, you don't really understand it well enough, right? So you need to ask more questions. You need to really kind of spend a little more time with it. And there's never going to be a point where you have 100%, like, that's investing doesn't come with a guarantee, right? If it comes with a guarantee, usually it's not. It's very, very low returns. It's usually 1 or 2% or very low. But some of these ones that have higher upside, you have to say, well, what do I think the risks are, and how likely is that? And what are some of those things? And that's where having not only the education, but also those relationships with operating groups and other investors. So I think that it's kind of one and then the other, and you kind of take what you're learning from this education, you take it to go to the events, you ask questions around that, you talk to some of these sponsors that are operating deals, and it just, what happens over time is you start to absorb more of it, and you kind of realize, like, oh, it seems like these guys, like, they resonate more with kind of my values, right? They really seem like they want to communicate well. They really seem like they share when things don't go well. It's really important to me, right? I want transparency. So those are things that over time you'll kind of get. So it's not just one thing, but I think it's the education along with the networking, and that's how people find deals and they really feel comfortable over time moving forward.
So now, when you're talking about deals, unpack that for me. What are the deals that you're talking about? And I suppose that, or I am wondering, because we're talking real estate here, does the market and the volatility there affect what is happening in this realm of investing?
Yeah. So your second question, yeah. So everything affects everything else, and everything comes up. One example of a deal that we are looking at, we've shifted a little bit from doing real estate deals only. Real estate deals are great. They offer a lot of stability. In the past, they offered a lot of tax benefits and cash flow. Right now, it's more difficult to find cash flow because rates have gone up, especially in apartment buildings. Some of the cash flow has been pinched, and so it's more of a long-term hold. You're not really seeing a lot of appreciation, cash flow, or tax benefits. So, there will will come a time where it will be good, and people that own them, it's great. It's a great asset that helps a lot of people. But we've shifted to more buying businesses. We're doing oil and gas deals. We're doing different types of deals that provide typically cash flow, or they offer tax benefits, which oil and gas does. But for example, we had it right now as we're recording this. Again, this may be different by the time it comes out, but the tariffs are a big thing, right? So tariffs are kind of the talk of the town. And we had a business we spent 7 months on acquiring. We basically raised $2.5 million. This is basically a deal that investors would see quite a bit of cash flow coming each quarter, and then have a payout kind of over the next 3 to 5 years. And it was a multiple, 3 times multiple was the projection. So we're hoping to take the money and triple over the next 5 years or so. And so what happened is we're pretty invested in this and very high cash flow. The tariffs, because this company sources products, it's an e-commerce business, sources products from China, we had to put the deal on hold and basically return investor funds. And so myself and my partner out some funds just from the diligence we did, but we'd rather, we didn't want to take the risk on of saying, hey, this is too uncertain right here. We don't know how this is going to shape up, and we can't move forward with the kind of risk that we see right now. So it's much better than if we'd closed, and we would have had to we would have figured it out, we would have dealt with it and made it work. But again, I think that, the couple of things we found that really cash flow well are, buying private businesses or oil and gas type related stuff, either the land, which is called mineral rights, where we own the land of oil and gas, where there's operating oil and gas, or the actual drilling itself.
Wow. I think that, when I think about a lot of this, I think, well, for me as a woman, again, I want to be able to understand in a way that I can then be secure, as we're talking about. Now, you're investing in businesses, and I watch Corey Sanchez, of course, and I know that, let's go buy some of these businesses, but it's also intimidating. So if someone is listening to you, what is it possible that they can start even if they don't have a lot of money to invest? I mean, like, what is the threshold?
Yeah, so there's really 2 ways to be an investor. Really, one is if you have more money than you have time. So this is that story of a lot of professionals. I worked in the medical field, a lot of physicians, a lot of CPAs, other business owners will say, hey, I've got, and I'm for along my career, I've got more money. I've got $1 million or more, and I can put in, some money passively, and hopefully get cash flow. And because I just either enjoy my business or I'm retired, I just don't want to tie up more of my time. I'd rather do a little bit of work on the front end to vet a team. And I talk about in my book a 3-step system on how we vet any deal, no matter what asset it is. So that's in my book, and just how that works. So how do you actually vet? And so that's if you have more money than you have time. Now, if somebody is saying, like, I don't have a lot of money, but I want to get involved in this, and this was kind of my story. Even though I made good money, I didn't have a lot of savings. I was early in my career. And so what I did is I didn't really have a lot of time. I said, I want to make the time. So I was working 30, 35 hours of my main job. And then I'd work, 20, 30 hours on the side doing real estate and other things. And so I kind of hustled, right? So I was able to raise capital and kind of partner with somebody who was in the space doing it. And so I think, there's different ways to do it. Some people will find, properties and what's called wholesaling, where you find a way to resell those. That's the one thing people do. Some people will be involved in flipping. I don't like these ones as much because they're very active and it's very transactional. So it's like you've got to almost like working as a real estate agent. Right. You've got to sell more homes. You've got to flip more houses. It's more work. It's like having a sales job, basically. Versus if you can raise money for bigger deals, if you can find deals, if you can be a part of somehow that process of somebody that, again, has more money than they have time, can you come in and help and fill in the time to help them find a deal that makes sense? So that's really what I did, and that's how a lot of people do it. And again, I encourage people to, if possible, look at larger deals, because when I first started in this, I didn't have, gobs and gobs of experience with apartments, but our first deal that we did, and after a single family, was 225 units, and we raised money for it. Well, how did I do that? Is I had a partner that had 15 years of experience managing and operating these types of buildings, right? So I could point at the team's experience and not just my own. So the interesting thing is when we do smaller deals, a lot of times it's just kind of us on our own doing the work and kind of being involved in everything, versus larger deals, you have much more of a team mindset. So I think it's really important to understand if somebody has more money than time, they can be a passive investor. And if somebody has more time than money, or they're willing to invest their time, then they would want to be more active.
So now how quickly can someone get a return on some of the investing that they will do, either of time or money?
Well, I think they're two completely. Are you talking about passive or active?
both. If you want to
Okay.
unpack you
Well,
both of them.
let's take those one at a time. We'll start as a
Okay.
passive investor. So as a passive investor, again, these are two, and there is some carryover between the two. But again, if I have more money, I'll have a call with a doctor. I've had 2,500, one-on-one phone calls with high net worth investors, and somebody's worth $5 million. They've only done stocks. They're in their 50s. They're like, okay, I want to. So that person, they're a great candidate to be a passive investor, right? And they just need to kind of learn about it, get involved. So for them, typically, and every deal is different. So for him, this doctor, his goals might be he's got a lot of tax stuff. So he might want to look into oil and gas, which offers incredible active income tax benefits. So again, it's great making more money, but I have friends that pay 50% in taxes. If you can reduce that, there's ways you actually reduce your active taxable income through investing in oil and gas. That might be something for him to consider. Or if I'm making money, how can I get my money working for me? So it's really vetting the team, vetting that deal. We've had some that, pay 1 month after they close and almost immediately they're cash flowing. Some take, a year or 2 years to start cash flowing. There's really no money until the end, right? So it just depends on the deal. We've done some that are, kind of a stable, kind of 1.5 to 2 times. You make, 100K invested might become 150 or 200K. That's, pretty normal deal. Then we have some that are 10X or 100X or more. But that there's a pretty high likelihood that doesn't work out, right? Because they're a much higher return. There's also more variables and more risk. So I think it just depends on the deal. It's hard to say. I'm not really saying, hey, it's one specific deal. We really offer kind of a system to evaluate and kind of educate yourself of how do you evaluate what this is, and is this going to solve a problem for you? So again, if you're a high earner, you pay probably too much in taxes. You need to look at taxes. Oil and gas might be something, or there's other projects that just cash flow. If you're getting toward retirement, you're like, how do I get my money making more money? So businesses. Or if I just want to park some money somewhere, get some other tax benefits, I don't really need cash now, then maybe real estate would be great. So it really depends on what people want. So that's the passive side. And we can go over the active side if you'd like. Okay. Okay, cool. So the active side really, it just really depends on the project. So, one example of this is I live in Southern California. We've had the fires here recently. I live about 1.5 miles from the fires in Altadena. And so I would love to be a part of rebuilding Altadena. So one of my thoughts is to buy land there, burned homes. There's over 4,000 homes that burned down single family. And so, I would love to go in and build there and put manufactured or modular homes on those, properties. So that one, hopefully I would be able to, within a year, maybe, be able to do something there. And again, I'm active in our business. I haven't really done that type of thing before, but I see there's a lot of value there because you can bring homes in, you bring them in very quickly, and then you can refinance and be able to get some money out of it. So it just depends on the specific deal, and it's hard to say. I mean, there's usually projections around it, but I think the quick deals as a passive or active investor is right away. They'll start cash flowing. Some people would say don't do a deal unless the cash flow is right away. Or at least there's cash kind of in the deal. Other ones are like, hey, we're developing a retirement community in assisted living in Alabama, right? And that's going to be 3.5 years before it started cash flows at all, right? So we did that one last year, and so we're just kind of waiting on that one, right? So there's different ways people go into different types of deals for different reasons.
Now, if we are seeing some of these opportunities and we're just starting out, how do we vet individuals that are already in this area? Because again, we can definitely network and as a coach, we want to go ahead and work and collaborate. We want to get clients, but we don't know someone when we're going into a brand new arena. How do we vet individuals that are doing this?
Yeah. So I really have in my book, I have a 3-step kind of a funnel on how you do this, right? Because things, usually when you start getting on different people's lists and you start getting deals sent to you, people usually start with the deal. But before you actually start with the deal, I like to go up to like the market. So like a funnel. So the top of it really is the market that it's in. So is this in the business world? What kind of business is it in? Is it real estate? What kind of specific market is in? Is that a growing market? For example, in real estate, if we're buying a real estate deal, we want to know, is the population growing or is it shrinking? Is our wages going up or are they going down? Are there more jobs being created or are there less? Those are all factors that'll show that you're in a great market is a market that's growing, that there's increased demand, even if it's an e-commerce business. If it's in the cosmetic space, well, that's a growing, more people or women are buying stuff online and virtually than going into a store and buying stuff. That's a great place to be. So that's a growing market, right? That specific market is growing. Second thing is kind of what you're asking is how do we vet the team, the operations team? What do we do there? So a few questions we ask is saying, well, who is this team? Have they done similar deals to this before? If this is a rinse and repeat, meaning they've done 10 of these before, and this is pretty much the exact same thing, then okay, well, that's great. That brings a lot of stability to it. But if it's like they're multifamily people and now they're doing a self-storage or they're doing a business, well, does that really fit? How are they going to bridge that? Who on their team is going to? So you just want to make sure you understand those things. And then also from the values, I used to think that when I first started investing, we all had the same goals, but I've realized over time, like, not everybody wants to communicate well with investors. Some people want to raise money and they never want to talk to an investor again. And that's really frustrating when you're an investor, right? When you're like, hey, I want to know what's going on, or hey, I've got a question about my tax form, or, and this is really hard when I've been a passive investor in a deal with another group, and something was going wrong for over 6 months before I heard about it, right? That didn't make me very happy, right? So again, just figuring this. So when you listen, you ask, you go to their website, you get on a call with them, you kind of ask some of those questions and just see, do our values match up? Is this kind of something that's their wheelhouse? And then after you do all that, then you get down to the specific deal and you're like, well, does this deal actually really meet my goals? Is it going to provide cash flow if I need cash flow, or tax benefits, or appreciated? Like, what is actually going to help me do what I need to do? And do I understand the ways that this is going to make money, as well as maybe the one or two ways it could lose money? And I'll actually ask that to the operators as well, is, hey, what do you think is the biggest risk of this deal? And sometimes they'll give me something different than what I were to share, right? So I'd be like, oh, it's interesting. I would have thought it was this, but I don't tell them what I see the biggest risk. I say, what do you think is the biggest risk of this deal, right? And I listen to see what they share. So the more you do that, the more you kind of get used to just having more conversations with more people. You really start to learn the good operators. They're so thorough. They're so consistent. They've been doing it for a long time. It's not that they never made mistakes, but they're honest about the mistakes and they've learned from them. They've made changes so that when they face this again, they're going to face it in a different way.
Okay, so I'm getting really excited about this because I'm starting to formulate sort of a good roadmap as how you starting to get involved and how you can dip your toes in the water and what are the things to look for. Now, the one question that obviously, and you kind of alluded to this as well, right? We have the tariffs, we have a lot of different things. We're dealing, and I believe, and again, this could just be my opinion, but I believe that inflation is really going to continue to impact us. How does inflation affect or not this type of passive income, investment, et cetera?
Yeah, so inflation is a big consideration, and this is probably most relevant for people that are looking for income. If you have money in the stock market, there's really no way. I mean, dividends maybe, but even then, if you have retirement accounts, we'll say, how much money do you need to actually be able to live off of it? And a lot of times, people say, well, there's kind of inflation hedge built in the stock market, but the stock market is super volatile. So we're seeing the cost of everything go up. We're seeing it at the pump, at the grocery store. I mean, they say it's 3 or 4% right now, or 2%, but like the problem is things are twice as much as they were before COVID. Like nobody can look and say like 50 to 100%, pretty much across the board, gasoline, food prices, all kinds of things. So these numbers, they're not always telling the truth on how they're actually going. So how do we, what do we do, and how do these deals affect it, like you shared? So I think that there are certain assets that are really positioned well to hedge inflation. One of them is multifamily real estate in general. There's a chart, if somebody searches Mother Jones, which is a publication, and searches rent and inflation, there's a chart that pops up and it shows you that since 1960, the line rent and inflation, they basically go hand in hand. So, and that just makes sense, right? The more currency that's created, the more rents are, the more things kind of gradually go up over time, and on a national level it'll happen. So I think it's a great one that's positioned well. I also think commodities such as oil and gas, precious metals, things that, basically you can't just print more of, right? And that's really what this has come from, is a lot of it is where we're creating more, or, demand for dollars in the global economy with tariffs and things like that. I don't think it's only going to continue. So how do you position your wealth? So I think that, that's why, again, we like things that are producing, that are real assets. We like businesses and great businesses, costs go up, they can just simply raise prices, right? Some businesses, you can't raise prices because of other competitors or other alternatives, or you just can't do it. And so if there's a business that's doing something kind of niche or creative, or something that Warren Buffett calls it like a moat, is there something that, like if you had a castle and you had a moat around it, what's the moat? Some of the alligators, if somebody's going to take that castle, it'd be very difficult to do. So businesses have moats as well. And sometimes it has to do with their brand. So if you and I were going to start a cola company and compete with Pepsi or Coke, that'd be very difficult, right? It takes a long time. We probably wouldn't succeed. I mean, maybe we would with some niche thing, but it'd be very difficult because, these are very established groups with established brands that, people are going to pay all around the world. They're going to pay 5 or 10% more every year. They're just going to keep paying more for that because they appreciate and value that product. So I think that, looking for things that no matter what, they're not a fixed rate. I guess the downside of this would be buying into an annuity right now that's like an investment that's like paying you 3% or 5%. What happens if inflation does go up to 5, 10, 15% and you're stuck at a lower rate? You're actually losing money every year. And this is why Robert Kiyosaki in his book Rich Dad Poor Dad says savers are losers. Not that they don't have bright prospects, it just means that they're losing money. And so if you can position yourself where you're riding that wave, I think it's very advantageous.
I was watching a video on YouTube. Again, Corey Sanchez, who I listen to a lot, and one of the things that she was talking about is also investing in ATMs. And I wonder, you're talking about the multifamily investing, and is that a thing? I mean, obviously it is a thing, but have you invested in ATM, and how does that work, or is that a good small way to get started as well?
There's different ways to do ATM. So we had a partner we were working with that did ATM investing. We're no longer involved with the partner, but did that for a few years, and it was a good investment for us. And I think one of the challenges with ATMs is that there's a lot of movement to go into digital money. And so whether it's crypto, whether it's credit cards now, I mean, you don't have to carry anything. You don't have to carry a credit card. You just tap your phone and hit the thing twice and it'll give you your card popped up as an Apple Pay. So we're getting to be a much more cashless society. But I mean, there's a segment of the group, particularly immigrants and low income, that use ATMs all the time. They're going in, they're paying a fee, and and it is a service. It does provide a lot of help for people. And you can send money through some of these ones now. You actually can cash checks and send money. So I think that it can work. It's just the challenge again. If I'm going to do this, you got to think about your entry to it. Do I want to create for myself another job? So if I want to buy ATM, if I buy an ATM machine, I'm going to try to place that. I've got to go try to sell somebody in the fact I'm going to place it. I'm going to service it. They got to trust me that I'm actually going to show up and keep money in that thing, whether it's a convenience store, and there's typically fees they get from that as well, which can work to be a little bit of money. Okay, I got one location. Maybe that provides, after everything, it's $1,000 a month. But like, I've got to go service it. I've got to go stock cash, and I've got to maybe carry around large amounts of cash. And there's a safety risk with that. And so it's not really efficient to just have one. You've got to have 10 or 100 or 1,000 for it to really start to make sense in terms of scale. So there are a lot of companies doing it. It is, established. There are more bigger players doing it. But I think, the idea is interesting. Other when people talk about it, similar to this is vending machines. Could you have vending machines and do something similar? And you have people pay, and then you go, maybe you have a teenage son or something, and they help you fill it up, or you kind of create a job for them. So I think there are definitely possibilities there. I think the challenge is it scalable? And then, for me, and again, if someone has money, then the goal is to become more passive, right? To make money while we sleep, right? If we're not there yet, that's fine. But is, operating ATMs or vending machines, is that going to get me to a place of financial and time freedom? Now, it could be if you're able to hire somebody and cover it, but then you basically have a business that you're now a business owner, you're trying to manage. That's what I realized when I was doing single family homes, is that it became another job. It was like, I got 4 or 5 houses, but if I were to go to 40 or 50 houses, then this is another job for me. Even if I'm not the manager, I'm still getting calls every day, every week, hey, what do we do in this situation? So I think those are all considerations. But I think for some people it can work, and especially if you've got, a teenage, maybe a pool business, but you've got a teenage son that's looking for work, and you can kind of help get him going in that might not be a bad idea.
Well, the thing that you also mentioned, and of course, I want to make sure that we cover on this because there is a tax implication. And one of the things that you talked about is that there is a benefit to making these investments because of the tax benefits, or what are the bright sides when it comes to taxes? Because we all have to pay them. But if we're making an investment, let's say in oil and gas, what is the return or the liability for us?
Yeah, so this is something that I think it's one of the biggest secrets in the tax code that people don't realize. So a lot of times, it's been said that there's 2 certainties in life, right? Death and taxes, right? But I would say the second could be optional if you structure it right. So there actually are paid tax strategists. A lot of people think CPAs are tax strategists, but only about 2% of them actually are tax strategists. And so there are people that actually you can pay to help, and if you save hundreds of thousands of dollars or $100,000, it might be worth paying somebody $5,000 or $10,000 to look at your stuff and help you create a plan. So there are people that do this. But I'll just talk real quick about oil and gas drilling. So again, this is no specific advice. I'm not a tax professional. I'm not a CPA. This is just, I have to give a disclaimer. But the way it works with oil and gas active drilling is, for example, let's say it's somewhere in Oklahoma or Texas or somewhere in the U.S., and a group will come in and say, we're going to drill here. And then investors, the U.S. tax code and the IRS, they say that whatever is invested into that, 80 to 85% can be used as a year one income reduction. So again, it's kind of a magic pill a little bit. So if I make $200,000 a year and I basically show up my taxes last year, said I made $200,000 a year, I paid taxes on it. Well, if I invest this year $100,000 into this oil and gas deal, it shows now that I have a taxable income of $115,000 to $120,000. So I've literally just on year one, I've saved probably between $20,000 and $30,000, depending on my tax rate, just on investing without even any returns yet, right? That's even just before I even. So this is what people do when they sell a business. So if anybody's selling a business, anybody's got lots of income, or maybe they've got other things, they'll find ways to say, how do I reduce my taxable income? So they'll put it in here. So then what happens? What are the returns then? Well, commonly it used to be, with oil and gas, it's known as kind of a risky thing. Hey, you're drilling here, a little bit of a Wild West kind of thing. Well, now it's actually gotten much better because the technology's improved quite a bit, where they have geologists that go in and they'll pay them to come in and they'll put electrodes on the ground, they'll test it, and they'll say, okay, we have a pretty high degree of certainty there's an oil reservoir down here, right, within a mile or whatever. So they'll drill down, and it used to be the holes were just simply vertical. Well, now if they miss it on the way down, which used to happen a lot more, they can just at the bottom take the drill, turn it sideways, and go horizontal for a mile or two. So it's much less likely. It's very, very rare. It still happens. There's a dry hole, but if you have a diversified well where there's 4 or 8 different wells that people are drilling, could one of those be dry? Okay, it could happen. It's unlikely, but it could happen. But if it does, it won't ruin the deal, right? So you'll still get a good return. So generally, for most of these, we'll kind of shoot for a 15 to 25% return per year. It usually pays up much more in the beginning, and these ones usually do cash flow pretty quick. We had one we invested in November, and in April 1st, it made its first distribution. So very quickly, and that was actually for the month, I think, of January. So it took a little time to kind of get it, production going and whatever. But so some of these are, again, they're very quick, but they tend to pay out very quickly. Usually, we like 18 to 24 months, kind of a return of capital if everything's going well. And then by year 4 or 5, it starts to kind of taper off a little bit. And then they can keep producing for the next 10 or 20 years, but it comes a point where it doesn't really make sense anymore. So anyway, something to look into, because if somebody's paying high taxes, that's the front end thing. And then you also get the cash flow. And then there's also some tax benefits on the back end as well.
Okay. And I really wish we had a lot more time. And you've sort of opened up my mind to different possibilities. This has been an incredible conversation. I do want to just, again, if I may ask one kind of question to wrap up, because I think that this may be in the minds of some of the listeners as well. I have some of the individuals who listen to the show and I work with who, again, have a nest egg, have been investing, have some of the money set to be able to, again, continue to grow their money and hopefully do so in a way that it's passive and continues to grow. But then I also have the listeners that perhaps, and I can think of a few, perhaps women that have come through Go Confidently services that were in terrible relationships, marriages, and they walked away with nothing.
Yeah.
How does someone in a position that maybe they're trying to rebuild their entire life take a step to taking advantage of this? And also, how do individuals that are going to participate in the type of work and the type of investing that you do in this alternative deals, how do you avoid a scam?
Yeah, it's a good question. So I think, again, it comes back to education. It comes back to learning. It comes back to growing. And again, I think of most people's financial plan. Now, I know you have a savvy audience. I can tell the questions you're asking, the type of things that you're getting into. You have a savvy audience, which is great. I'm happy to do a call with anybody to just touch base, whether looking to invest and find out goals, or just, hey, I'm trying to rebuild. And I'm happy to have a conversation with anybody on your group. So happy to reach out. But I have a relative that is in his 30s. and he has some mental health stuff going on. He inherited a bunch of money. His mother passed away, and we were talking about millions and millions of dollars, right? And so, but he didn't really have the education and the stability to really manage that too. And they say now the average person actually gets an inheritance typically like late 50s or 60s. So it's a lot of times it's later. And so we also don't know, even because you don't have money now, doesn't mean something can't open up later. So again, I look at it all like learning and education. And we've made a lot of money. We've made millions of dollars. We've lost millions of dollars. So it's like, it's all learning and growth. And my goal is just to continue to learn and keep moving forward. So I think that for all of us, we can get discouraged because we went through a relationship that didn't work. I went through a divorce 7 or 8 years ago. That was very challenging financially, and it also opened up some new things financially for me. But I think each of our situation is different, and so I think that for all of us, the learning is really critical. But we just can't give up that. Hey, it's never going to be like that for me, or it's never going to be that way. One of the things that I've learned, I'm actually writing my second book now called Rich Brain, which is how the wealthy change their brain to change their bank account. And in my research and what I've discovered, 86% of millionaires are self-made, meaning they did not inherit their wealth. So it means that these are learnable, teachable things. These are mindset and things that we do of how we approach money that we can learn. So it's not just, hey, I learned this skill. It's also my own self-limiting mindset. And we know this. We know people have been through difficult things or lost money, or I go through sometimes. I got to kind of give myself a little mental slap. And, hey, get in there. You're going to do it. I get a slap on the butt. Go for it. But we get discouraged. And so I think that we need to really build ourselves up that like, hey, I'm investing in myself. This can get better and doors can open, and I'm going to keep moving forward, knowing that, hey, even if I don't have the money now, my situation can change.
Yeah. Yeah. I think that the mindset, for sure, no matter what you're trying to accomplish, is going to be one of the most important things that you need to work on, because our propensity to be negative, our propensity to think of the worst case scenario, is always going to be part of us. So we need to take an active role in shifting the way that we see things and understanding and asking the right questions. Not, oh, I don't think I can do that, but rather the question of how can I, right?
Yeah.
And I think that this has definitely opened a lot of different opportunities for individuals who are listening. I think that definitely my curiosity is piqued. You have incredible resources. In addition to the Fire Yourself, the book, you also have, I believe, a free guide on how to use inflation to your advantage and some other resources. Tell me a little bit more about the things that you have available that are free that people can go and leverage themselves. And I would also ask you to remind us, how do they connect with you to get on a free call with you?
Yeah, absolutely. So there's a lot there. I find sometimes on these shows, I just like to give one thing because it's overwhelming if I write too many things. So the one thing you can do, leave you with, is I've got this guide I put together. It's about 30 pages. It's a color guide. It's how to use inflation to your advantage. So it basically goes over some of the things we talked about with real estate, with using debt to buy assets such as real estate, or even things like precious metals or borrowing, or how do you actually get on the other side of the equation where you can really use this for yourself. So to get that free guide, you can text the word inflation to the number 33777. And so if you text the word inflation to 33777, we'll send you that guide. It'll talk to you about how you can set up a call, or you can learn about our deal. So all of that's just kind of I think the next step is just to get that guide, and then we'll kind of walk you through how to go from there.
Well, I love that you brought us back, because, I want to do everything. Mine is always going to all these different things, but I think that you're absolutely right. The guide is a good place to start. Thank you so much for taking the time to be here, for really unpacking a lot of different things. I know that we barely scratched the surface. And of course, this hasn't been any financial advice, but it's just opportunity to think of things that are out there that are different, that maybe we did not consider, but it's worth finding out about and definitely taking the step. Bronson, I want to tell you that one of the things that when I invited you to the show as well, I know that you were a values-driven individual, and I want to encourage the listeners to go ahead and make sure that you go and connect with him, because he definitely has a heart for giving back. I've seen that in some of his stuff out when I checked him out, but also he is the kind of person who will talk to you and give you that information. And yeah, he's put together some of the great resources and make sure you text him for the guide. Thank you for being here. I so appreciate you.
Thanks so much. You got a great thing you're doing here, and I just can tell you're really adding a lot of value to your audience, and you really care. So I really appreciate you doing this. This is really great that women entrepreneurs have this. I'm going to start referring some of my friends to this show because this is a great show. So thank you.
Thank you. So give us one more time the number that we need to text, and also where they can find you online.
Sure, sure. Yeah. So my name is Bronson Hill. You can just search me online. There's everything will pop up. But if you text the word inflation to 33777, we'll send you that free guide and let you know about our upcoming deals and how to set up a call.
Amazing. Well, thank you so much, Bronson. And my friends, everything is going to be in the show notes. You don't have to kind of scramble to go get a pen. Make sure that you come back and listen to some of the key points of this episode. Make sure that you share this episode. It is important for you to listen and benefit from the episode, but it's even better when we share the wealth and we share this episode with others. So thank you again for being here. And don't forget, my friend, go confidently in the direction of your dreams. Thanks again, Bronson.
Thanks so much.